Hello traders, you're welcome back to the Forex Geek channel, and I especially welcome you to this video. So in this video, we're just going to be diving into a high win rate MACD plus parabolic SAR plus 200 EMA trading strategy that brings clarity, structure, and clean entries into your trading game. All right, let us just get straight into how these three indicators work together and how you can build a powerful trading setup around them. Now let us start by adding the 200 EMA to the chart, the 200 exponential moving average. All right, here we go. The 200 EMA sets the trend direction, okay? When price is above the 200 EMA, you look for buy trades. When price is below the 200 EMA, you look for sell trades, okay? This helps eliminate counter trend trades and keeps you aligned with the dominant market flow. The next indicator is the MACD, right? That's the moving average convergence divergence. Okay, so basically the MACD shows momentum. You focus on the MACD line crossing above the signal line for bullish signals and below it for bearish signals. It works best when combined with a trend filter like the 200 EMA. Okay, then we are going to add the parabolic SAR indicator also. The parabolic SAR indicator. All right. So the parabolic SAR gives entry and exit signals. All right. It gives entry and exit signals. Dots flipping below price suggest bullish sentiment, bullish momentum. Dots flipping above price indicates bearish momentum. So it's a simple way to visualize, and visually confirm a trend continuation or reversal. All right. Now let's talk about how to combine these three wonderful indicators. For your buy setup, you need to have price above the 200 EMA. For a buy setup, your price must be above the 200 EMA. All right. Then you have to make sure that your MACD line has crossed above the signal line. Then your parabolic SAR dots should flip below the candles. So you must have the parabolic SAR below the candles, and then you must have price above the 200 EMA and the MACD line above the signal line. In that case, you can look for buy opportunities. So this would have been a good place to enter a buy trade. Okay. So now for sell setups, price must be below the 200 EMA, and you need to have your MACD line cross below the signal line. That cross happened around here. All right. And then the parabolic SAR dots must flip above the candles. So you can see that we had a bearish confirmation from the parabolic SAR here. Price dropped below the 200 EMA here, although it went back up and dropped again. Then the MACD line crossed below the signal line around here. So we had our confirmation already. This one had already happened. This one happened. And this one happened. So this would have been a good place to enter a sell trade. Now, once all the conditions align, that is when you should enter your trade. Okay, do not enter a trade when one condition is still yet to align. Okay, even with strong signals, avoid choppy markets. All right, make sure that after you have entered a trade, you should set your stop loss at ideal levels. For example, for a sell trade, your stop loss can be above the recent swing high. Then for a buy trade, your stop loss can be below the recent swing low. Okay. Then for take profit, you can actually go with a fixed 1:2 risk to reward. or you can just trail your stop loss using the parabolic SAR for dynamic exits. This allows you to lock in gains when the market trends longer. Okay, but make sure you avoid choppy markets, all right? Even if the signal is strong, look for clean price action, higher highs and higher lows in an uptrend, or lower highs and lower lows in a downtrend. Stay out during ranging conditions where the 200 EMA flattens out. All right, when you have a ranging condition, when the 200 EMA is flattening out, just stay out of the market in such a scenario. Okay, also avoid trading just before high impact news releases. All right, because that can spike volatility and trigger false signals. Now, this strategy works well on the 15 minutes, the 30 minutes, and the 1 hour charts. All right. The higher the time frame, the more reliable the signal, but the fewer the opportunities. So test it on your preferred pair and session for the best results. Okay, you can create an alert system on TradingView. If it is TradingView that you are using, even if it is MetaTrader that you are using, you can also create alerts. You can see here, click on trading, click on alerts. All right, you can also create an alert on MetaTrader. So whether you're using TradingView or you're using MetaTrader, you can create an alert system. All right, because maybe if you are expecting price to get to a particular zone, right? Meanwhile, this strategy is structured, is rule-based, and easy to follow once you have practiced it a few times. So smash that like button, subscribe to the channel for more weekly strategies, and drop a comment if you want to see this backtested or automated in the next video. Ensure that you always observe good risk management. Do not trade an amount you cannot afford to lose. Do not risk more than 1 to 2% of your account balance in a single trade. And ensure that you observe good risk to reward ratios, minimum of 1:2. All right. Thank you for watching, and I look forward to seeing you in the next video. Happy trading.